All right, let's talk about one of the most secretive and frankly most successful hedge funds in history, Renaissance Technologies. Now, this whole thing was started by a brilliant mathematician, Jim Simons, and the key thing to know about him is that he wasn't some Wall Street insider. Nope, he was a code breaker who saw financial markets as just another complex code that needed to be cracked. And as we're about to see, he didn't just crack it, he completely solved it.
Okay, so let's just dive right in with the single most important number you need to know, 66%. From 1988 all the way to 2018, the main fund at Renaissance, the Medallion Fund, generated an average annual return of 66%. And to be clear, that's before their famously high fees. I mean, it's a number that is so ridiculously high for so long that most people in finance can barely even believe it's real.
Now, this is where you can really see just how wild this is. If you'd put $100 in the S&P 500 over those 30 years, you'd have ended up with about $1,000. Hey, not bad at all. But that same $100 in the Medallion Fund, it would have grown to over $2.1 million. See, they weren't just beating the market. They were playing a completely different game.
So this all brings up a huge question, right? It's really the core of what we're talking about today. How on earth did one guy and his team of scientists pull off something that legends like Warren Buffett or Peter Lynch could only dream about? How did they build what is, pretty arguably, the greatest money-making machine in modern history?
Well, the answer starts with the man himself, Jim Simons. And the most crucial thing to understand is that he was not a product of Wall Street. He didn't have an MBA, he didn't study finance. He came from this world of pure abstract mathematics and high-stakes code breaking. So he looked at markets not with some gut feeling, but with the cold, hard logic of an algorithm.
And just take a quick look at his career path, because it's pretty remarkable. A math PhD from Berkeley by the time he was 23. Then he does top-secret code breaking for the NSA during the Cold War. Then he becomes the chair of a major university math department. He already had this legendary career before he even considered trading a single stock. This wasn't some side hustle. It was him applying a lifetime of high-level thinking to a brand new problem.
In this quote, it tells you everything you need to know. For Simons, the entire world was just a set of patterns waiting to be found. He didn't care about a company's big vision or its latest earnings report. All he cared about was the data, the little signals hidden in the noise of the market. His whole approach was built right on top of that idea.
So, how did they actually do it? What was the secret? Well, this gets us to the core philosophy of Renaissance. It was never about making big, bold bets on where a company was headed. Not at all. It was about finding teeny, tiny, fleeting advantages in the market, and then exploiting them thousands or even millions of times a day. The strategy they used is called statistical arbitrage. And this just perfectly shows how different their thinking was. They didn't care why a stock was going up or down. They only cared that their models found some temporary, non-random pattern. They'd trade on that little blip, hold it for maybe just a few minutes or even seconds, and then get out as soon as the pattern disappeared. You gotta love this quote from Robert Mercer, their former co-CEO. It just perfectly sums up their entire model. Think about it. They were barely better than a coin flip. A 50.75% win rate sounds pretty awful, right? But when you're making millions and millions of trades and you are systematically right just that tiny little bit more often than you're wrong, well, you can make billions. So what kind of tools were they using to get that tiny edge? Well, this was their toolbox. We're talking decades before AI was the buzzword it is today. They were pioneering machine learning to find patterns in historical data that no human could ever possibly see. They were using natural language processing to scan news articles in seconds just to gauge market sentiment. And of course, they used high-frequency trading to place all these tiny bets with inhuman speed.
But here's the thing. All those tools are pretty worthless if you don't have the right people using them. And this is what's really fascinating. The secret to Renaissance visions wasn't just some magic algorithm. If it was, someone else would have copied it by now. The true innovation, the real genius of Jim Simons, was in the team and the culture he built.
Just look at the difference here. It's night and day. On one side, you have your traditional Wall Street firms hiring MBAs who analyze balance sheets and trust their gut feeling. And on the other side, you have Renaissance, who hired a bunch of PhDs who had probably never even read a financial statement in their lives. He wanted mathematicians, physicists, computer scientists, people who were trained to find signals in data, not stories in stocks.
And this quote from their current CEO, Peter Brown, just sums up their philosophy perfectly. They didn't want people who came in with ideas about how markets should work. No, they wanted brilliant scientists who could look at the data with completely fresh eyes and just let the models do the talking, totally free from human emotion and bias.
So the really crucial part was that this team wasn't locked away in separate departments. Simons created this incredibly collaborative, almost academic environment. A string theorist, a language expert, a computer scientist, everyone had access to the main code, and everyone was encouraged to try and make it better. That collective brainpower, that was the real secret sauce.
So, when you look back, what's the lasting impact of Jim Simons and his team? Well, it's way bigger than just one very successful fund. They totally changed the game on Wall Street and kicked off this whole new era of data-driven, algorithmic trading.
I mean, just look at this chart of their performance. The incredible thing isn't just how high the bars are, it's how consistent they are. And check out 2008, the middle of the global financial crisis. The S&P 500 lost almost 40% of its value. The whole world was melting down. Medallion, oh, they were up over 98%. Their models actually thrived on the chaos that crushed everyone else. It proved their strategy had basically nothing to do with the regular market.
So in the end, Renaissance is still this huge puzzle. Their actual code is a total black box, one of the biggest secrets in finance. The fund itself has been closed to outsiders for decades. It just makes its own employees fantastically wealthy. But its biggest legacy is the quant revolution that it started, forcing the entire industry to get on board with a world where data scientists and algorithms now run the show.
And you know, the story doesn't just stop with making money. Simons used his incredible fortune to become one of the world's great philanthropists. He and his wife Marilyn started the Simons Foundation, and they've donated billions of dollars to support the exact kind of fundamental science, math, and autism research that his own career came from.
And that leaves us with this one last really fascinating question. You see, Simons had an edge because he was using math and computers in a way nobody else was. But today, every big firm has a quant team. AI is everywhere. In a world where everyone's a quant, is it even possible for one person or one firm to truly solve the market again? Or was Jim Simons a complete original, a product of a unique mind at a unique time that we might never see again?